Hello family, so today I want to share with you a quick strategy that I just kind of came up with on the spot. And it started with just attending a training session with one of the gurus. And so let me tell you about what I learned. It was brought to my attention that a break in retest of a trend line was more consistent than a break in retest of support and resistance. And what I mean by that, it meant was you were less likely to get faked out with a break in retest of a trend line versus support and resistance. And the reason being is sometimes you have to know where you are in the market. And if you're trading this pattern right here, so you got your consolidation and your breakout to the upside, typically people are looking to buy at this previous resistance, now support zone, and looking for the market to go that way, right? So let me just go ahead and clearly mark the zone. Typically, that's what we would normally do. Market was in a downtrend, it consolidated, broke out, retest buy. So, but what happens is if you don't know where you're at in the overall trend, what could happen instead of this market buying right here, it could continue down, break this structure right here, and then retest for the sale downwards and continue down to another point. And so that is how she explained the break and retest of the support and resistance and why it wasn't as reliable as the trend line. So I decided to backtest this theory. And let me tell you, I saw some really good results. And I highly encourage you to backtest as well. So let's go ahead and dive into it. I got 3 steps for you. Well, 4. And that is you're going to identify a trend, draw your trend line, wait for the break, use your fibs to mark your swing points, and whatever the intersection of the fibs and your trend line is at, that is where you mark your zone for entry. You can always use the 50% or the 618 just in case that X intersection don't line up with anything. So let me go ahead and show you. So clearly we're in a downtrend right here on the 1 hour time frame on GJ. So I'm going to pull my trend line from this point to here. Now technically you want to use your rate, and then you will start from where that market had pushed down, and if you can grab a little pullback, you do so. And you typically want to use the rate and just swing it out, and whatever point it touches first, that is what the trend line is. You don't want to force the trend line because you don't want to be in a trade too early and get faked out. So I'm just going to keep my trend line right here, and then I'm going to wait for the break. Once I get the break above, I'm going to wait to identify my swing high and swing low points from that break. So let me zoom in for you. I'll pull this down to the right. And so I have my break right here. I'll take my fibs, draw it from swing high to swing low. I am including the wicks. Okay. So let me zoom. I included the wicks on this move right here. This is the swing point. This is the swing low, the swing high, and wherever this X fell. So the X on this trend line from the 1 hour and then the fibs intersect right here. Okay, as you can see, we got the perfect entry using the X. Okay, and the X actually aligned with the pretty much the 618 area. So you could have just simply put a limit order here. And then what I've noticed also is that this market typically will go up to the 127 extension, but I prefer to trade structure to structure. So if I'm entering down here, my TP would be around here. This is TP1. Of course, I always like to secure 20 pips as well. And then as you can see, this market moved up to the 127 extension. So it's pretty simple. Like I'm trying to tell y'all, please backtest this trade. This strategy is very easy. I do have divergence on as an indicator, and you can use that as extra confirmation. And what that means is once you start to see this green line at the bottom, I have mine on green. You can change it to a different color. That tells me that this bearish trend, like the sellers are starting to lose momentum. And typically before you get a change in direction, you'll see some sideways movement, and then the market will take off. And so this was a great indication that, we about to get ready to buy this thing up. And so, and then of course I got my 50 moving average. There's so many ways that you can just make this strategy stronger. I just gave you 4 simple ways to trade it, and there's extra confirmations that you can use in conjunction to trade this. So I hope I was able to add some value to you, to everybody, and stay tuned for the next video. Take care.